Is your credit score awful? Does the thought of having your credit run cause apprehension or embarrassment and just make you not want to use or access your credit? If so, stick around. We're going to show you how to improve your credit score and keep it high over time. Hey guys, welcome back to the channel. I'm Mike, the Everyday Money Guy, and if this is your first time to the channel, consider subscribing to grow your wealth, increase your success, and gain your financial freedom. Also, if you like this video, hit the thumbs up button to help this channel and this video. Guys, when most people think about credit scores, they're thinking about interest rates on loans and essentially just interest rates for when you pull your credit for, say, a mortgage or an auto loan, perhaps for a credit card or something like that. But credit scores are used for quite a bit more things than loans, and there's a good reason to keep your credit score high without necessarily being worried about an interest rate on a loan or whatever. For example, some of the things that it can affect other than just your interest rates on loans and the terms that you're able to take for those is job prospects for higher end jobs. A lot of times they'll take or run your credit score to see how you are with your responsibilities. Apartment applications or any type of lease option, be it on a vehicle, for like I said, an apartment to rent, for some sort of commercial space, whatever. Almost every time they're going to run your credit score. For insurance rates for, again, auto insurance, homeowners insurance, things of that nature, those all have a credit component to it, and they typically run your credit score. Security clearances, if you are a civilian or a military employee that has access to classified information, security clearances have a credit and financial component to it. And if you're in one of those jobs or you're looking to get one of those jobs, that can disqualify you, because people that want to get at that information, for example, like a Russian or Chinese type of spy, they can use that financial hardship to buy secrets from people. And oftentimes some of the United States' largest espionage infiltrations of the United States have come because of financial hardship with people for sensitive information. So keeping that credit score high and keeping your finances under control, if you're in those type of situations, is even more critical than normal. And then utility startups, if you're moving and your credit scores is not great, they may make you pay a higher upfront deposit. And then even ability to get a cell phone, even at 0%, just the payments out over 26 or 30 months or whatever they're doing now, you will need to have a decent credit score in order to get that product. So I like to think about credit scores as more of a trust or reliability score. And for folks that are using that, it's going to be a quick indication, some sort of number that they can use to put on there that you'll pay your loans, your bills, your rent, and that you won't sell secrets or proprietary information, and that in general you are reliable or not. And now what makes up these credit scores is in large part your payment history. That's one of the biggest ones. If you don't pay, that's gonna, you're gonna have a bad time. Also, your revolving credit use, as far as credit cards or lines of credit that you have, the age of the accounts associated with you, the type that they are, for example, like mortgages, auto loans, home equity lines, credit cards, things of that nature, and then how often you apply for credit. And those are going to be hard inquiries, and those can negatively impact your score. So now most credit ratings run from 300 to 850, with anything over about 740 being considered a very good credit, and anything over 800 being considered exceptional. So you want to find yourself in that 740 plus range. Anything in the 500s and 600s is just, I don't think it's good enough. You want your numbers to be as high as physically possible. So I'm going to show you how to do that and how to improve your credit score. And it won't be necessarily hard, but it just requires some work, and it takes a little time if you're in those 500s or 600s or, God forbid, 400s to get your scores up into the upper 700s. So the first thing that you need to do is you need to pay your damn bills. Paying your bills is the first thing to do, even if it means making the minimum payments and cutting out something else just to get a history of on-time payments. Is one of the biggest things. Delinquent payments will just, trash your credit rating, and you'll be down in the 5, 6, 400s or whatever. 2 is reduce your debts, because it will improve your debt to income ratio, as well as reduce the amount of percentage of credit that you have available that you're utilizing. Now, if you just make the minimum payments, it will reduce the amount a little bit. But what I would strive for is to try to start adding more than the minimum to your payment so that you can start chipping away at that debt and getting your debt numbers down. As your debt to income reduces, your credit rating will go up. Don't open any new accounts while you're trying to increase your score. Hard inquiries, for one, will offset any type of increase that you may have from your debt to income being larger because you've opened new credit. So just reduce this hard inquiries while you're trying to increase your credit score, and that will help out quite a bit. On the flip side of that, don't close old accounts that you have, as long as they don't have an annual fee. And this usually applies to things like credit cards. Don't necessarily close those as soon as you have them paid off. For one, it reduces your available credit, and that affects your credit utilization number, because if you bring one down to, let's say, 0, and it has a $10,000 limit to it, and then you close it, and let's say you had 3 cards that had $10,000 limits on them. At one time you had 30,000 total, you're 100% utilized, and then you pay off 1 to 0. Now you're only 66% debt utilization, but you close that. Now you have less debt, but you also have less available credit, so you're back up to 100% of your debt utilization. And I know that sounds kind of silly, but that's just the way it is, and this is one of those things that you got to go with. Also, if you close accounts, it reduces the average age of your credit, and as I said, that is a item that credit reporting agencies look at to determine your total credit score. Take a look at your credit report, and if there are any inaccuracies, dispute them. You can go to Credit Karma and view your credit report for free, and if there are any inaccuracies on there that are negative, or really positive, but typically they're negative, dispute those things so that you're not getting punished for something that you didn't do. Now the big question is always, how long is it going to take to improve my credit score? Well, really that depends on how screwed you were before. So any delinquencies or bankruptcies that you have are going to stay on your report for 7 years, usually, sometimes up to 10. Inquiries like hard inquiries for credit cards, mortgages, auto loans, things of that nature will remain on your report for about 2 years. And as you're going along in your journey from a low credit score to a high credit score, just know that every time that you make a payment, especially if you make a payment that's larger than the minimum, but even just a payment, you're creating that history with your credit of making payments, reducing your debt to income, providing, like I said, providing a record of payments, reducing your credit utilized, and all that will over time add up to a much higher credit score, so you can get the lowest rates, you can get the apartments that you want, just whatever that you need to do with your credit. Now, if you need to reduce your debts in order to get your total credit utilization down, there are a lot of ways that you can go after this. The mathematically most efficient way is to attack the debt that has the highest interest rate, but you may want to go after the lowest dollar amount and pay that off so that you have that psychological win of paying off a debt, and will allow you to keep it on towards paying off your debts. There are some things as far as you can do debt consolidation loans, things of that nature, but that opens up, you open more credit, so that'll be a hard inquiry on your credit report. And to be honest with you, from my point of view, I just like directly attacking the individual problems that you have and not trying to wrap it up in another debt obligation. And then once you have fixed your credit score in whatever ways that it needed fixing, just be sure to be cognizant to not fall into the same traps that led you down to a lower than desirable credit score moving on forward in the future. If you already have an outstanding credit score, these tips will help keep it high and maybe will be able to help you push from the 700s up into the 800s. And so for those of you that do have great credit and those of you who have hopefully brought your credit up, be sure to put it to work for you once it's there to try to save you some money. For example, I'll link to a video that I have about refinancing your mortgage and how you can save hundreds or thousands every year or month by refinancing your mortgage. Right now, interest rates are stupid low. We're talking under 3% for 30 years. So if you do have an over 3% interest rate on your 30-year mortgage, it might be something to take a look at, once you get your credit score in order, or if you already do have it in order. Guys, I do appreciate you tuning in and watching today. If you like this video, be sure to hit the thumbs up. Be sure to subscribe so you don't miss out on this stuff in the future. And I'll catch you on the next one.